So this is part 4 of Dissecting Nigerian Tax Act 2025 for clearer understanding. In part 4, we're able to tell you the tax laws that have been repealed, that's cancelled, and the one that have been amended, the objectives of the Nigerian Tax Act 2025. So in today's video, that's part 4, we'll be giving you this. You can see the screen. So we'll be giving you this. So do well to follow us, like, subscribe, refer us to businesses, and feel free to reach out to us to serve as a tax consultant, external auditors, or any of your compliances that you may need. You can see the screen. So we are starting here. So top 18 key changes. So we are in number 2. Top 18 key changes in the Act. That's in the Nigerian Tax Act 2025. So we have the company income tax, that's CIT. So what are the key changes in the Act? So the first one is Company Income Tax Act. That's the Company Income Tax, CIT. So the A part is tax rate, section 56 of NTA. So you can see that in the section 56 of the Nigerian Tax Act. So the changes is that small company that have a turnover of 0 to 50 million is 0%. More like they are not paying company income tax. So that is why we are telling business owner, if you are earning such revenue, right, you need to upgrade your business to limited, right? So this CIT is, that's those that are registered as limited, not business name. Then the second thing is above 50 million turnover is 30%. If your turnover is 50 million and above, you are paying company income tax of 30% on the profits. So small company means a company that earns gross turnover of 50 million or less per annum, with total fixed asset not exceeding 250 million, provided that any business providing professional services shall not be classified as a small company. So if your business is a professional services, if you are rendering a professional services, you are not qualified as a small company. Whatever you earn, if you are registered as a limited, whatever your turnover is, you prepare your company income tax and you will file. So you will still pay tax, even if you are earning 50 million turnover and below. Even if you are earning 10 million, you still pay tax. So you are not qualified as a small company. But any other businesses aside from professional services company will be qualified for this exemption of 50 million and below turnover and 250 million of assets, fixed assets. Notwithstanding any provision of this act or any other enactment where in any year of assessment the effective tax rate of a company is less than 15%, such company shall recompute and pay an additional tax that makes its effective tax rate equal to 15%. So if you are within these categories, of course, you are going to pay 15% of your tax. So it will be computed. So what we are saying here is not that you pay profit of 15% on turnover, but on the profit. Of course, before you pay tax, you must have removed all your expenses, all your allowable deduction and everything before you arrive at your 15% of tax liability on the profit. Another key change is a company that is a constituent entity of a multinational enterprise group and any other company with an aggregate turnover of that's 20 billion and above in a relevant year of assessment. This is on section 57 of NTA. So this is another key changes in the Nigerian Tax Act. So for the purpose of this act, effective tax rate means the rate produced by dividing the aggregate cover tax paid by a company for a year of assessment by the profit of the company. So effective tax rate. So you are paying tax on the profit of your turnover. So profit means the net profit before tax as reported in the audited financial statement, less 5% of depreciation and personal costs for the year. So that's what we are trying to explain to you. So you have to prepare audited accounts before you will know the type of the tax that you are going to pay, your tax liability, the level of it. So we are here to serve you as your tax consultant, as your external auditors. And if you want to prepare audited accounts, we are here to help you. But you must ensure that you provide all the necessary information that we need to do that, because we are ensuring that businesses are tax compliant, and we do all our possible best to ensure that we work within the framework of the law to be compliant. Then number B is imposition of tax on income, profit, or gains. So income tax shall be imposed on profit or gains of any company. So it is profit or gains that you pay income tax on. The implication of this is that gains made by any company, such as gains from disposal of assets, realized foreign gains, forex, gains from shares trading, shall be charged at CIT rate of 30%. So it will be computed, all your normal allowable deduction will be removed. So another implication of this is that losses made during the disposal of assets will also be considered in the computation of income tax of the company. So this is actually for the company. So we will still get to the individual, that's for the disposal of assets, forex gain, and all of that. So to be on the normal standard of 30%. The another thing is that there is no withholding tax deduction on business income of small companies. Remember that we brought you a video on 50 exemptions that small companies and individual people can enjoy. So do well to like, subscribe, and refer us to businesses. Watch the videos, reach out to us if you need us to work with you. So this also includes an exemption from the requirement of to deduct and account for tax on payments to vendors. So definitely that is the essence of withholding tax. But if you are in small companies of 50 million and below turnover, 250 million of fixed assets, you don't need to, the company don't need to withhold your tax. You are exempted from withholding tax, and of course value added tax as well on your invoice. Then the D part is that there is a restrictive definition of small business. There is a restriction on it. This includes companies that are offering professional services. Of course, like I said earlier on, if you're a professional service company, you don't qualify for small company. So far you are rendering a professional services, you will prepare, if you are a limited company, you will prepare your audited account. Even if you are any 5 million turnover, you still pay. Even if it is small, you still pay the company income tax. So you are restricted from small business definition. For these companies, the incentives applicable to small businesses under the tax reforms bills are not applicable to them. So meaning that professional service company, even if you are earning 1 million, 2 million turnover, you will still charge withholding VAT, you will still charge value added tax wherever it is applicable. Then the E part is the elimination of minimum tax on loss-making company. Before, we used to pay minimum tax. That's like 0.25%, right? On loss, you are making loss as a company. Imagine, that is one of the applauds that we are going to give this Nigerian Tax Act, is eliminating the minimum tax on loss-making company. Imagine you prepare audited accounts and you are making loss, and they still ask you to pay 0.5% minimum tax on loss. That means you are paying tax on capital, which is not good enough. So that is a good part of this Nigerian Tax Act. So any loss where a company made a verifiable loss, of course it must be verified, there must be an evidence for it. There's no basis for imposition of effective minimum tax. That's section 27I of the Tax Act, deals with the ascertaining the total profit of companies and also consider the losses of companies. So currently, out of tax law provides provision of 0.5% minimum tax on turnover of a company. Imagine, on turnover, on your turnover, more like a capital, where the company has a turnover of above 25 million and has operated up to 4 years and above. So you are going to pay minimum tax of 0.5%, which is not good enough. So the F part is that general principles of tax deductibility. 1. Section 20 of the NTA outlines the types of expenses that may be deducted when determining taxable profits, right? So it's not all expenses that will be deducted. If you don't abide by some certain instructions or laws as embedded in the Nigerian Tax Act, it may not be allowed as deductible expenses. So subsection I specifically states that such expenses must be wholly, exclusively incurred in the production of income to qualify for deduction. So if it is not wholly and exclusively, before we used to have one wholly, reasonably, exclusively, and necessarily, but now it is now wholly and exclusively. So that means we, if you look at the acronym, wholly and exclusively incurred in the production of income to qualify for deduction. So that is what we have. So then we have the lottery gaming ads for those that are in the betting companies. So you can look at it, what tax you are going to pay. So, and every confusion, everything has been removed. So the changes have now made everything to be more clearer, both for CIT, capital gain tax, for those that are doing their lottery. Then we have the deduction for research and development, right? The research and development. So it's allowed in section 165, subsection 2 of the NTA. Now it has been adjusted to 5% of a company's turnover for the year. So that means you have 5%. This represents a significant deviation from the provision under CETA, which allows a deduction of 10%. So we have 10% in Company Income Tax Act, which have been repealed and amended. So we now have 5% in the NTA for company income tax for research and development. So that is the percentage that you are allowed to deduct to reduce your tax liability. So the implication is that companies now have a broader base of 5% of turnover, as opposed to total profit, from which they can commit funds to research and development activities. So we'll be stopping here today in the part 4 of Dissecting Nigerian Tax Act 2025 for clearer understanding. So do well to like, subscribe, comment, share, refer us to businesses on our YouTube channel. And if you need any of our services, you can feel free to reach out to us, and we'll be willing and ready to work with you. So make sure you stay compliant until we meet again in another video. Bye for now.